Dan Hopper, RE/MAX Alliance with the Stop Foreclosure Institute of Denver and Westminster, Colorado. Here to talk to you today about credit repair. For the last 10 days or so, we've been blogging about how to go about fixing your credit, repairing all the derogatories, and cleaning up stuff on your credit. We've been getting a lot of inquiries from people wanting to know what is going on. You talk about impact. How is it actually impacting our credit? We know you say it does, but how? Couple things real quickly. Anytime you have missed payments or you're in default 1 month, 2 months, 3 months, 6 months, loan modifications, you take those into consideration. Loan modifications still define you as in default because you haven't paid the original note that you signed. So you're short a payment, you're in default. They throw all those deficiencies back on at the end of the loan. That's a different issue for another day to discuss. But when you're talking about those things, lenders who are reviewing credit reports after these things have happened to people, a year, 2 years, 3 years down the road, they're telling us this. As far as on your FICO score, let's say you're at 700, it's impacting you when you are in default and you do loan mods and nothing else beyond that, just missed payments. It could hurt your credit anywhere from 50, 75, and sometimes up to 100 points is what they're telling us. Keep that in mind. What about short sales? Very simple on the short sales. When you do a short sale, remember, there is a deficiency on the balance owed. Depending on how the bank reports it to the credit bureaus, how they do that, it could impact your score, they're saying about 100 points, and maybe a little bit more. But sometimes it's not as bad, depending on how they report it. If you can get them to indicate that it was paid off per agreement, paid in full per agreement, those type of things that states it on the credit report, maybe not as many points, maybe 75 points is what they're telling us. But you figure about an average of about 100 points on the short sale. Then, as you go to the foreclosure, they are telling us that it could impact you as much as 150 to 300 points on your FICO. How do they actually impact in longevity? Short sales don't say short sale. They just talk about how the loan was paid off, not full balance, paid off in full in agreement, and that's in that regards per agreement. But as far as able to go get another loan again, home loan, they're telling us that it could impact you 3 years. FHA will work with you in 3 years after a short sale was done. Foreclosure, FHA will work with you with 3 years on that too. The problem is the foreclosure can impact on other things out there for 7 years. Fannie Mae, Freddie Mac are taking guidelines today, and we're being told by some of these things, it may take up to 7 years, no exceptions, for you to get another Fannie Mae or a Freddie Mac type loan. So FHA would be the way to go, of course, in that regards, if it's possible. So anyway, just wanted to give you a quick idea of what's going on in how all these derogatories impact credit. And this is what we're being told by lending institutions that are reviewing credits of people that have gone through loan mods, missed payments, short sales, foreclosures. Anyway, hope that helps. Please visit my blogs at www.denverloanmodhelp.com or www.denverstopforeclosureblog.com. Right there below you. Please review them, write them down, and we'll catch you next week on our weekly blog. Thank you. Have a great 4th of July weekend.